Hey Trader, Stephen here. It's Thursday, April the 18th. We're gonna look at the market, and it's kind of coming back. It's just chugging along. It's amazing how many times I think this has done this, where you think it's starting to show some weakness, which I think it is, and we're gonna look at that here in a minute. And then by the end of the day, it just comes roaring back, and that just goes to show you how strong of a market we're really in. So we're gonna look at that. We're going to look at some breadth, and we're going to look at some overall individual stocks and some individual sectors. So let's kind of get right into it. I want to start with the Nasdaq, and I really just drew this chart here. We are getting incredibly close to an all-time high, and if you'd asked me if this would have just V-shaped it and came all the way back, I would have told you you're crazy when we were way down here. But you know what? It happened, and it happened a couple times in the 1990s as well. More rare, these V-shaped bear markets, but hey, it happens. So we've had a couple pullbacks along the way, and they kind of look ugly when it gets started and you think it's going to roll over, and then it just kind of comes right back. So we had almost a 5% pullback initially from peak to trough. This was last month, and then we had one a couple weeks ago where again it just started to look weak, and then it just kind of found its support, 3.5% pullback. So really nothing crazy. You have to expect these along the way. Now we've had two pullbacks. So do we get that last leg where it just kind of runs through these all-time high, these pivots right here? It's very important, and I think it seems reasonable that it's going to try to pick these levels off, and get to that all-time high, I think. And it's an opinion before it has any kind of meaningful pullback, and I'm talking more than this right here. We could have another one along the way, but it just looks like the market just wants to head that way. So I think you got to make sure that you're not going to argue with the market and just try to ride with the trend as long as you can. Because I'm going to show you a chart where just show you like, hey, even though it seems sometimes scary to get back in after just a vicious drop, if you look a year or 2 years out, you won't regret it, right? As far as, as long as you have your rules in case it rolls back over. But, the markets can run for a long time after a bear market. So right now we're just kind of looking at these pullbacks, and not really a whole lot has happened between this week and last week, but I'm just thinking these are going to get picked off. Maybe we just even gap through these because you have so many shorts right here that have to cover right here. So if it gets up here, you might just get kind of just a surge where you get a big volume day, big gap day, whatever, just telling the market, hey, I'm here, I'm at an all-time high, and it sucks everybody in, and then it starts to pull back a little bit. So I'm not going to show the S&P 500 because it looks exactly the same as the Nasdaq, but I do want to show the Russell 2000 because it did have kind of a bad day yesterday. It was down over 1%, I believe it was, and now it's trying to find support. And the Russell 2000 isn't anywhere close to an all-time high, and you could say it you could make the bearish case for that, but I don't know. I don't definitely use the Russell 2000 as a decision-making index just because I've just seen how often it can decouple from the S&P, the Dow, and the Nasdaq. But it is lagging a little bit. There's a lot of, I didn't draw any lines on here because there's just too many places I could draw them. I could draw them right here, kind of this downtrend right here, and say, okay, it broke out of the downtrend. I could draw this little mini double bottom right here and say, okay, it broke out here, and now it's finding support in this zone. And then I could draw a line across here and say, okay, that's the that's where it needs to break out to head higher. What I think right now is even if I say, okay, if I draw a downtrend line right here and it kind of meets this 1540 area, I think if that level breaks, it negates this whole move, and it definitely, if it kind of breaks this 1540 area, I think it definitely opens the doors and probably makes it even likely that it's going to pick off these two levels right here and opens the door for lower. That doesn't mean that it's going to come all the way down here. It just could be a shakeout. Shakeouts happen a lot of times when you're headed out of a bear market. You'll get just a shakeout, suck everybody into the bear side, then boom, right? And in a way, I think that's the market that we just came out of. We came out of just the biggest shakeout where it was just a straight drop down, right? Just got everybody scared, Armageddon, the sky's falling, and then boom, now we're off to the races again to continue to finish this super cycle. So right now, just as far as if you pay attention to Russell 2000, I'm just kind of looking at this 1540 area, and if that breaks with conviction, then I'd kind of be a little bit more cautious. But I'm really more taking my signals from the Nasdaq and S&P and really looking at those because I think they carry more weight. Very short-term breath is something I've been looking at, just kind of being cautious of. So you have this short-term breath where you can see right here, one thing that I've noticed in the short-term breath, and this is the percent of stocks above the 20-day moving average. It peaked April 5th and has been downtrending ever since while the market's been heading higher. So what does that mean? Nothing is more, sorry about that. It's more of a data point, in my opinion, just to say, okay, little weakness on the short-term side. You know, maybe it could be money rotation. Maybe it could be, you know, the market is ready for a breather, because usually breath slows down before the overall market does, but just really something to pay attention to. But as you can see, you know, even though technology, the XLK, the percent of stocks is curling a little bit, that's still an incredibly bullish number. Financials have been leading in the last couple weeks. Discretionary is still bullish. Industrial is still bullish. I think it's really been healthcare that might be, I mean, that just completely rolled over. A lot of the healthcare providers have, and that could just be dragging the overall breath down. So, you know, it's something to look at. It kind of looks like staples, or they look like they're wanting to curl up a little bit. So we'll just kind of keep an eye on that. Energy is just not doing nothing special. Materials have weakened a little bit. And then utilities have just been taken out to the woodshed. But that's not a bad thing because they're more defensive in nature. But that probably has more to do with the overall movement in bonds and rates and the correlation that it has with them than actually, you know, people are just selling off utilities because they're going gangbusters on stock. So we'll kind of keep an eye on that. So if we go to kind of the longer term breath, you know, that's why I'm not just ready to scream, hey, the market's ready to roll over, because I think it's going to hit the high. But you can see the long-term breath right here. 75% of the S&P 500 stocks above their 200-day moving average. That is very strong. So you can't, I don't know how you can make a bearish case with that. I'm sure you can always make a bearish case. You can say, oh, this is, you know, V-shaped and all these other things. It's going to come back down, but you know, it's going to cost you money over time if you're always trying to make the bearish case in a rising market. So I think that right now you pay attention to the price action, you follow the price action, and you can see right here in the Nasdaq, like, just started weak. Maybe it just sucked everybody in, think the market's going to roll over, and it just comes right back. So, you know, and the same thing with the Russell 2000. You can see how it started, and we don't know how it's going to finish yet. We've still got a couple hours to go, but again, if it finishes in the upper end of the range, or it kind of comes back in the latter part of the day, that's what I think is incredibly strong. The Dow is absolutely taking off today. Not necessarily the one I want leading, but you know, it is what it is. So let's kind of go in here and look at the market summary for a second and see if we can kind of see anything that's standing out. And that's really all I look at. I say, okay, what's up the most today? What's down the most today? And then we can kind of give me a gauge for where we're at in the market. So, you know, the major indices, we just looked at that. As far as sector spiders go, industrials are looking strong. So maybe we investigate that here in a second to see why industrials are so strong. REITs are very strong right here and right here. They continue to be strong, and they have been strong. Gold's getting slaughtered today and is looking a little suspect to the downside. So gold, natural gas continues. Natural gas is just in a major long-term downtrend. Oil and all these are, and this is just one day. Brazil's bouncing back today. And you can see the short term, all the yields are decreasing, so that should help the TLTs of the world. Sugar and coffee. I just kind of want to open this real quick because I didn't even notice. I wasn't even paying attention to this earlier. Yeah, sugar is just, you know, you keep having these big pop days, but it's all within a bigger consolidation. So there's really nothing to see here until there is, you know, it kind of starts to clear some major pivots. Yeah, that's in a downtrend. I wouldn't touch that. Doesn't look good. So, and then you have the currency. So let's go over to, I think we should go over to the sector summary real quick. And this might be a short video just because I'm really just I'm kind of waiting on the market right now. Not a lot has been changing. It's been in a rising uptrend. The uptrend has been, if we go back here and look at the Nasdaq for a second, it's really been in a kind of a just tight range, which the tighter it gets, the more it's going to eventually get out of that range. But it's just been in a tight range. So let's look at where the money is flowing in the last 1 week. Financials and industrials continue to lead in the last week, and technology is still up there. You can see healthcare is just continues to underperform. So I would just be really cautious on any bottom buying right there, because I was looking at some healthcare providers the other day and they looked really, really weak. So a lot of times they don't come back right away, is all I'm trying to tell you. So if we look in the last 1 month, see discretionary, technology, services, all the right industries are towards the top, and REITs and utilities are towards the bottom. And then again, healthcare is just getting slammed. So you always continue to want to, focus on what is strong so you can get some nice momentum stocks in play. Okay, so I'm going over to the industry side. I just kind of want to look real quick just to see what is moving. And I think we need to go down to industrials, because there's a lot of broad strength right here. You can see that there's a lot of broad strength and there's a lot of broad weakness in healthcare. So railroads are showing some incredible strength, commercial trucks, vehicles, a lot of travel companies, transportation companies. It's funny, trucking's down at the bottom. So, let's just kind of open that and just see if railroads are the strongest, if Kansas City Southern is the strongest in that group. Yeah, something is going on here. I haven't read the news or investigated the fundamental standpoint, but that is showing a lot of strength. Money is really, really starting to rotate in some of these industrial names, and they're all moving together. And a lot of times, 40 to 50% of a stock's move is going to come from the industry it's in. So you'll get sympathy on the upside, you'll get sympathy on the downside. So, railroads might be something worth looking at. Commercial vehicles and trucks. Let me kind of look in here. Again, you have a lot of green. I'd say that, a little bit of red down here, some weakness, but that's broad participation right there. Bluebird, we'll just kind of look at that real quick. Look at the top one. Yeah, that's not a lot of strength, and that's not a good looking chart, but it looks like it's trying to come back. So maybe you have a good buying opportunities there at Tata Motors. We'll kind of look at that real quick. That looks like a strong one. Yeah, it's starting to really come out of here and really get going. Now that kind of makes me want to look at the weekly chart. Yeah, that kind of looking interesting here. So you have Tata Motors right here, just absolutely rolled over, base, first stage base, and maybe you can see, let me move the volume below the price real quick just so you can see those spikes. Look at the volume spikes coming out of this first stage base. Normally first stage bases are a little bit longer, but this is a weekly chart, so that could be 6 to 7 months, but it's just surging out of here. So I think this stock is a little bit extended, but if it kind of pulls back and creates another consolidation or comes back to the top of this base, might be one worth looking at, kind of looking at the fundamentals and find out what is going on there. So if we go back here, so that's really what's going on in the industrials. Looking for other pockets of strength in the technologies, you definitely have the semiconductors. Let me close out all these so I don't have too much going on. Semiconductors, that is a ton of broad strength ACM research. And the reason I look at stock charts a lot is because everybody can use this tool. There is a free version, and I think most people, even the free version, you can access this. So this is interesting. ACM research, it doubled almost in a month, pulled back, created a nice little bull flag, and it's breaking out again. So a little extended for me, but there is some major accumulation stepping into this thing. So I'm a little bit interested, but a little bit too much for me right now. So, but semiconductors is definitely something you want to look at. A lot of these industrials are probably pockets of strength. And definitely on the financial sides, you have a lot of these financials that have surged in the last week. So I'm just kind of curious what the inside of this looks like. Yeah, man, that's a lot. There's a lot of money piling into banks all of a sudden. So you can see JP Morgan down here, Texas Capital down here. So some of these, Credit Suisse, some of the big ones. But again, there are pockets of strength out there. There are most certainly pockets of strength. One thing I would just kind of have you, let me kind of close these out. One thing I would just kind of have you be cautious about sometimes is when you get in the latter stage of a rally, you can just, I'm starting to notice that some of the growth stocks aren't acting so strong, right? They're actually acting weak. A lot of times what happens is you'll get underperformance when you're in kind of this last quartile, decile, whatever you want to call it. A lot of the swing trading, some of the growth stocks that you expect to move very quickly. I'm not saying that there aren't some of them that are moving very quickly, but the kinds with the big fundamentals, they start to kind of look like they're consolidating or even breaking down. And I'm starting to notice that a little bit. I'm not saying that the market's not going to continue, because I think I made it clear. I think that we are going to gun for pick off these pivots right here. But I'm just saying, like, a lot of times you look at the overall market and you're like, yeah, that looks strong. Then you look at a lot of individual stocks, and I passed on a lot of swing trades in the last couple of weeks, and most of them wouldn't have worked. They just wouldn't have, or they wouldn't have hit target one. Maybe one or two have. But when I look at a lot of stocks and I say, okay, if I'm passing on them, and I'm starting to notice there's a little bit of weakness, and I'm noticing that a lot of the trades that I might have taken wouldn't have worked. Sometimes that causes me, to throw the yellow flag up and be like, okay, let's be patient, right? Let's not let, the fear of missing out just absolutely consume me, and let's just kind of see where this goes here. Because what I don't want to do is I don't want to just kind of load up right here. I'd rather load up on one of these and then let it happen. You're going to be better off, instead of trying to catch it as it's breaking out to an all-time high. And even though everything might be looking good, you're better off just kind of waiting for that pullback, because you're pulling back in the individual stocks, you're going to pull back to support. So all I'm saying is just be cautious, even though I do think the market's going to pick this off. So, but if we look at, I always come back to this chart, and I just kind of wanted to show you, just because sometimes when you come out of some really, really, really ugly market action, just kind of show you how strong the market can be after you're coming out of really ugly markets. You had the 2011 correction. There's a bear market, I think, in the small caps, but man, and then it was coming out, right? It was coming out of this correction, and then you had, boom, probably a 10% correction right here, scared everybody, even another one, and then it's just absolutely off for a multi-year run. And then you had a double dip right here, 2015, early 2016. Then you just had a multi-year run, and then you had this leg, and then this leg that just probably scared the bejesus out of everybody, and then it could just come back. And maybe, I'm showing you, see these dips right here, these dips, and these ones after something big. These are going to happen likely most of the time, but I'm just saying it will shake out a lot of people and say, oh, see, I told you the market's going to roll back over, and then it doesn't, and then it shake you out one last time, and then boom, you get your big run. So don't be surprised if we get those shakeouts, a couple along the way. But again, you really, I think, after a bear market, you want to kind of be more bullish, I think, than bearish. And that doesn't mean don't pay attention to the day-to-day, but that way you can kind of have, like, okay, I'm looking for, we already had just a massive shakeout. Could we get another one? Yes. But if history tells us something, that I'm looking for a stronger market the next couple of years than a weaker one. So I want to try to stay in my positions to the best of my ability. So that's really all I have for today. Again, short video, but right now we're just kind of waiting on the market to see if it kind of hits the all-time highs, waiting to see if it pullbacks. Just a nice trending uptrend. So let me know if you have any questions.